Welcome to Trader TV. I'm Dan Barnes. Today we're talking with Jim Switzer, Global Head of Fixed Income Trading at Alliance Bernstein. We're going to be discussing the credit markets, some of the challenges in liquidity and price formation that exist today, and how electronic trading can improve efficiency. Jim, welcome back to the show.
Thank you, Dan. Thanks for having me again.
Jim, how are credit markets looking in this month?
When you look at where the index is trading, we're off the post-COVID tights, 6, 7, 8 basis points, nothing crazy. We are digesting enormous supply for the month of August. I want to say that our expectations were 75 billion. I think right now we're at 145 billion. And that's on top of 1.45 trillion that we've seen year to date, which has blown through any record we've ever had. Clearly, the issuer behavior coming out of COVID was creating cash buffers, protecting themselves. Now it's much more opportunistic. It seems like it's more maturity profile management. We're seeing a lot more people issue in the long end of the market, which is steepening out curves. There's another reason why curves are steepening, and that's that the Federal Reserve has said that they'll target 5 years and in. Now, they bought very little, certainly relative to what the ECB has been doing over the years. But I think the bigger issue right now is the Fed's credibility, their body language, and is there a Fed put in the market? So how much they bought is less relevant to the fact that they would be there.
Yeah.
Third thing that I think is happening is the street is de-risking. When we look at bid cover ratios, what percent of the time are they winning and are they covering? Those numbers are going down, which just tells us they're being more selective. The market now is difficult. There's less conviction and liquidity is poor. It's difficult to do blips to blops. It's easy to buy supply. The street, their behavior in times like this is generally to take less risk, frame markets wider, and everything we're trying to trade is off of a framed market. So as markets get framed wider, it's much more difficult for us to trade. When you think about electronic trading, and even the all-to-all trading, which has gone up considerably for us and is a bigger focus, we still need the sell side. We still need that liquidity framework out there. So that's certainly challenging. And look, rightfully so, we're coming into September. After seeing the supply we saw in August, September expectations are 125 billion. Mm-hmm. But what we're really not sure is how much of that was pulled forward into August and how much of that is real and how much more opportunistic. So it's a tricky situation right now.
We've seen a number of proposals that would potentially alleviate some of the workload that's on trading desks right now on the buy side, handling this huge volume of issuance. Do you think that's a big challenge at the moment? And to what extent do you think they're going to provide a solution?
We've seen technology, innovations, efficiency hit us in a number of ways with the alternative trading platforms we have out there. Now they're helping us create these platforms to allow us to do portfolio trading on it. We have direct connectivity with a number of our dealers. We ourselves have created an execution management system. The one theme in all that is we have no connectivity on the new issue side other than a phone call. Yeah. And that is a struggle. It would actually benefit the sell side, the buy side, and the issuers, because when you get $145 billion of supply, it's very difficult for a trading desk and even the portfolio managers at that moment in time to really think about secondary trading. So we tend to all move over to the primary side of the market, and that's unfortunate. There should be simple solutions. Now, I do believe there's a consortium of banks that are pushing this forward. In terms of when, it should have been 6 months ago, but I'll take it whenever it gets here. I'm agnostic to the solution. I just know we need a solution.
Do you think buy-side trading desks will have learned lessons from the volatility in March in terms of preparing themselves to use electronic trading more effectively if there's volatility later in the year?
Electronic trading is great. It's easy and it's at your fingertips. But when you're trading billions of dollars of credit in any given month, it's very difficult to recognize all the opportunities. And I think a lot of these trading desks are going to realize that, the data aggregation tools, the optimization tools that you're going to overlay, that's going to tell you what's the investable universe at any given moment and how does that universe overlay on what you're trying to do at any given time. If you have those tools, you're going to be able to take advantage in that market. And look, we want to be in the electronic trading market. We certainly want to be in the anonymous all-to-all market. We want to be a price maker. We know that's alpha generating. So, that is our goal. I think it's a big reach for a lot of the subscale asset managers to be able to have those tools to be able to get in. So it's a question of the haves and the have-nots, and this gets into the build versus buy. What do we do?
Yep.
The other part of it is, where else is there liquidity? Really, the only reason we're in the position that we're in today is because of the Fed and the central bank intervention and the bazookas that came out. You have to question whether or not we can actually count on that every time we see a crisis. At some point, we have to see a regulatory response to what happened through the COVID crisis, whether that's talking about, daily liquidity, vendor pricing, leverage in the market, cross trading, alternative liquidity providers. I can go on and on and on. And as a trading desk, that's what we're asking ourselves. Can we answer those questions? What could this look like, and how do we get out in front of that?
Jim, thank you very much.
No problem, Dan. Thank you for having me.
I'd like to thank Jim for his expertise, and of course you for watching. To catch up on our other shows, go to tradertv.net and etftv.net.